Good afternoon, everyone. Welcome to today's AFSA Business Partner webinar, Captive of the Future, How Technology is Reshaping Captive Finance Operations. We are pleased to have you with us today. My name is Grace McGurn, and I'm the Communications Manager for AFSA. Today's webinar is sponsored by Netzel. They are a highly engaged AFSA Premier Business Partner, and we greatly appreciate their support. Your presenters for today are Faizan Gori, Chief Strategy Officer, Richard Howard, Advisory Board Member, Eva Kellershoff, Vice President of Sales, North America and Europe, and Ian Smith, Member, Board of Directors. A couple of housekeeping items. Your mics and cameras have been disabled to ensure there are no disruptions. The webinar is being recorded and will be available to view on our website early next week. If you have any questions, please post them in the chat. We hope everyone enjoys the webinar, and I turn it over to your presenters.
Thank you so much, Grace. So let's start by just welcoming you all to the Captive of the Future. It's sponsored by Netzel Technologies. If you're unfamiliar with Netzel, we build AI-powered ecosystems that make commerce, finance, and servicing seamless for lenders, OEMs, dealers, and fleets, so consumers can buy, fund, use, service, and renew assets with trust and transparency. In today's webinar, we will be discussing the impacts of trends and technologies on the captives. Please enter your questions in the webinar panel. We'll be addressing them at the end of our session. We will email out the slide deck and recording after the webinar to all attendees. So let's just start with some introductions, starting with myself. So, my name is Faizan Gori, and I am Chief Strategy Officer at Netzel. So I've got over 15 years of experience. I specialize in digital transformation and strategic expansion. I've been recognized for my visionary approach to aligning technology with business goals and fostering sustainable growth and enhancing customer experiences across diverse markets. Previously, I served as Vice President of Strategy at Netzel, and before that, I was the former CEO of World 3D, a venture-backed digital twin platform that combines gaming engines with 3D maps. So pleasure to be here. And now on to our esteemed panelists. We're really lucky with the folks we've gotten together for this. So I'll start with a woman that needs no introduction in this world, and that is Eva Kellershoff. She is the Vice President of Sales for North America and Europe at Netzel. Eva works at the intersection of technology, finance, and mobility, and divides her time between the United States and Europe, primarily Germany. She is currently a member of the supervisory board at the leasing bank Alain Mobility Group in Munich. Eva also served as a board advisor at Way.com in San Francisco, as well as a few other startups in the mobility space, both in Germany as well as in the US. Thank you for being with us today, Eva.
Thank you, Faizan, for the kind words. Really great to be here.
Next up, we have Ian Smith. He is a member of Netzel's board of directors, and with over 3 decades of global leadership experience in financial services. He has a proven track record in automotive finance, digital transformation, and strategic growth. Most notably, he served as Chief Executive Officer for BMW Group Financial Services USA and the Americas from 2017 to 2021, where he was responsible for a balance sheet exceeding 50 billion and an annual net operating income of over $600 million. Pleasure to have you on, Ian.
Thank you, Faizan, and looking forward to engaging with the group and responding to your questions. It's a pleasure.
Thank you. Last but not least, we've got Richard Howard. He is a board advisor at Netzel, and from 2021 to 2024, he served as president and CEO of Daimler Truck Financial Services USA, where he also held a seat on the global board of management, overseeing operations across North America and Asia. Prior to that, he spent 7 years as senior vice president of sales, product strategy, and marketing at Daimler Truck North America, where he held global responsibility for the Freightliner truck brand, leading a team of 900 people and overseeing revenues exceeding $20 billion. Earlier in his career, he served as president and CEO of Daimler Financial Services Asia, based in Singapore, and as Vice President at Daimler Financial Services America, where he led operations in both the United States and Latin America, driving sustainable growth and profitability across diverse markets. Richard, thanks for joining us today.
Fazan, great to be here. Great to be part of the team. Really looking forward to the conversation today. Thank you.
So we have representation, some leadership from both Mercedes and BMW today. It could get a little spicy. I hope it gets a little spicy, actually. All right. So to start off, we wanted to actually ask the audience a question. So we have a poll that should be running in your chat right now. And we'd love to hear from you on what you see as your top priority this year. And I'll just give everybody a minute to respond. So options are digital transformation, updating core systems, AI and analytics for efficiency gains, automating regulatory compliance, building a better data strategy, or other. So just give a few more seconds here, and then I'll go ahead and announce the results. All right. So I think responses are still coming in, but looks like we have at least a majority that have responded so far. So with 58 responses, number one is embedding AI and analytics for efficiency gains. So about 38% of you said that is your number one priority. And then following that was digital transformation, then automating regulatory compliance, then moving on to building a better data strategy. So good for the audience as we're actually going to cover each of these topics today in detail. So let's set the stage about the discussion today. As the webinar's title, this is about the captive of the future. This is the topic that we think about most deeply at NetSol constantly. And really, what does that mean? So it means that really over the last few years, the ground under captives has shifted and the pace is only accelerating. Customers now expect effortless digital-first journeys end to end. Many of us will wrestle with legacy processes and technical debt, with cyber risks rises and regulators rewrite the rules. AI is moving from pilots to human-in-the-loop agents. Value is created across the entire asset lifecycle, earning loyalty through service, renewal, and new mobility adjacencies. And we're expected to do it responsibly and sustainably. The captive of the future isn't just a lender, it's an orchestrator, using a secure, composable platform to connect partners, data, and AI while keeping trust and transparency at the center. Over the next 45 minutes, we'll unpack these themes, show what good looks like, and share practical takeaways for the next 12 to 18 months. So let's start by talking about digital-first customer experiences. And there's some data here, primarily coming from Equifax, but the data paints a picture. Today's young buyers, especially millennials and Gen Z, are very comfortable shopping online, but browsing isn't enough. They expect to complete the whole journey digitally, from research to financing to purchase. What's also interesting is that Gen Z is already leaning towards credit unions instead of captives. That tells us that the traditional captive model just isn't connecting with this new generation of buyers. And it's not just about offering financing anymore. These younger customers often have credit profiles that don't fit neatly into the old risk models. So the standard way of assessing risk isn't as effective. This is where AI and automation can make a big difference. Smarter tools can evaluate these complex credit situations quickly, approve more fairly, and deliver faster decisions. That leads to a smoother customer experience, exactly what younger customers expect. So I'm going to ask each of the panelists, starting with yourself, Eva, that given this data, what do you think is the most critical factor for captives to remain competitive?
Thank you, Fazan. I think most of the time we think about digital experiences as it has to be all online, but that's not necessarily the case. Maybe 5 years ago, people were predicting, okay, it's all going to shift online, everybody's going to transact online, but that doesn't happen. That didn't happen, and dealers, in return, have really embedded themselves again and again in this ecosystem and have demonstrated how important they are. So for this digital first experience, it comes down to really one connecting point, which is the omnichannel integration, meaning no longer everything has to be online, but online and offline, the online and the in-store experience really have to match. So that's where the whole consistency topic comes in, where customers will not feel let down when they enter the showroom and see the exact same screens that they saw before. So that was one point. The second point is seamless journeys. That means that you don't really necessarily have high friction elements as something that customers will worry about. So particularly the points where it comes down to pricing. So really bring transparency into your pricing element. Second, credit analysis. That should also be a very smooth process. And finally, contracting, which is always the high friction element in the entire journey. That could also be improved by bringing it online. So I think we have everything connected here if we are embarking in a seamless, speedy, and efficient online journey that will then continuously be brought into the store and the experience will remain the same.
Thank you, Eva. Ian, how about your perspective?
Well, I don't think there's any doubt that the digital first customer is of critical value and importance for the future. And I think if you look here at the 7% that's reflected, I think a lot of that is actually down to the ability to even transact online, the end-to-end process. There are actually few players who even do it. I think what's more striking actually is that people look at how they will buy in the future or for the next purchase. The amount of pure in-store shopping and purchasing significantly changes. And that requires us to adapt. I think the biggest challenge here, of course, is aligning that negotiation, price upselling, maybe add-on components that you would experience in a traditional store. How do you make that work function online in an environment where people need transparency, they need choice? You can't do necessarily some of those approaches that may be being used extensively in the marketplace today. So finding the right balance with the retail network and finding a process that works. There's only a few companies that actually do this quite well. I think Carvana is one that does that quite well. Tesla does. When I was with BMW, we launched a program called Mini Anywhere that was really looking at trying to bring the end-to-end process online, which you indeed do. But in order to do that, you have to standardize terms, you have to make things transparent, and almost come from a completely opposite perspective than we deal with today. So lots of challenges in delivering on this one, but I think it's an imperative if we're going to survive. What it also means is that whilst we're stuck to this model, new entrants have a big wide opening to really disrupt what traditional lenders have been doing. So something to think about, sure, for this group.
Great. Thank you. And Richard, your perspective.
Yeah, thanks, Fazan, and good day to everyone. Of course, a fascinating topic when you start to think about the Captive 2.0, as you said, Fazan. I think what goes through my mind firstly, of course, is when you think about the captive, we can't think it in isolation. It's fundamentally around the future of automotive retailing, the automotive business per se. So from that point of view, the joint strategy on the digital platform is absolutely essential. An alignment between the dealer strategy, OEM strategy, and the captive is central to that success. And you kind of framed it, I think, in terms of driving competitive advantage. That normally focuses on a couple of key takeaways. Yeah, how do we drive kind of world-class customer service? Yeah, how, as Eva mentioned, is it completely seamless? Yeah. There's some great examples out there. I think, firstly, the trust in the digital platform today for us as all consumers is super high and only going to increase. Yeah. So therefore, we have very high trust in digital platforms if you think about our own life. But I think the leaders in this space are definitely companies like already mentioned by Ian, Carvana. I worked closely with them in a previous life, so to speak, and definitely I think what the Garcias have done to revolutionize used car retailing here in the United States is pretty amazing. And even their market cap today nearly eclipses some of the OEMs. And definitely, I think they've used digital transformation as a way of doing that. They've used, I think, very successfully AI to drive best-in-class customer service, working with Microsoft on their care program. So in terms of driving, I would say digital transformation and the captive, I think about it in terms of the captive of the future 2.0 has to be central to the OEM strategy. You know, we're best positioned to connect the customer, to connect the dealer. Digitalization of the total ecosystem is absolutely the big opportunity. And like they say, Fazan, if it can be done, it will be done. So really a clear strategy for the long term is super important. Working with our dealers, working with our customers, but ensuring that you can really add value when you compare yourself to something like a Tesla, or you compare yourself to somebody like Carvana. That would be my perspective this morning.
Thank you,
Maybe
Richard.
just to connect it back to the polling question about AI and I think data and analytics. I think it's probably not necessarily known how much of a reveal the customer gives when they start a journey online, and they don't necessarily have to sign up for an account or something, but their traces can be matched quite early on. So for dealers who are still struggling with identifying customers that start online, I think data analytics can provide a great deal of that information to qualify those customers online. And then AI finally can help along the online journey where the dealers can ingest themselves and start supporting the customer in their journey as well, and continue to interact with them, maybe potentially also take negotiations online. So the possibilities and the opportunities are really there, just to grab them.
Great. And on the topic of AI, as the group said that was their top priority. So this next section, let's talk a little bit in more detail about AI. So AI has permeated what feels like every aspect of business and life these days. And of course, that includes credit decisioning. When a customer can go from application to approval in minutes instead of days, it eliminates friction. It drastically improves the customer experience and gives captives a significant competitive advantage over traditional lenders. So in summary, this shows how NetSol, with an AI-driven platform, solves the core challenges of captives. Number one, customer experience, as we were just talking about. Instant approvals meet digital-first expectations. Number two is operational efficiency. It slashes costs and boosts productivity. Three is risk management. It provides consistent, intelligent decisioning. And finally, compliance. It enforces policy automatically, reducing risks, and this technology becomes then the foundation for the next generation of captive finance. So there's some interesting stats out there that McKinsey have presented where they're talking about, when we talk about human in the loop agentic systems, we're looking at a potential 20-fold increase in productivity over the next few years. So the next step for captives is invariably the AI evolution in agentic systems. Agentic systems represent a complete shift in how captives can operate, moving from manual processes to technology-driven, human-supervised models. The core message is that AI won't replace people. It will enable a massive increase in productivity by empowering them to focus on high-value tasks. The ultimate benefit of this architecture is a massive competitive advantage. By boosting credit turnaround times by up to 30%, captives can offer a frictionless, near instantaneous experience that a traditional lender simply cannot. By having a human review the output of AI agents, you build an essential safety net. This provides a clear audit trail and ensures that the AI's decisions are explainable and compliant, which is vital for both regulatory bodies and customer trust. Now, this is a big question. I'm going to start with Richard, and then I want to get your perspective, Ian. But in a captive context, where exactly should the human sit in the loop when we're talking about underwriting or servicing or collections? And what would you say are the non-negotiable moments that must remain human judgment?
Zan, thanks for that easy question. So yeah, the big one out there. So yes, I mean, firstly, we're living in a kind of amazing days, aren't we? The kind of numbers 20 times X, from McKinsey. Even if you reduce that by half, it's still a massive kind of factor. So I think ultimately the strategic focus has to be on making great business decisions. Yeah. So this question about where we take data, turn data into knowledge, and ultimately with our AI turn it into wisdom, let's say that, where in our business system can we not only reduce costs, but bigger than costs, of course, is making great business decisions. So I think definitely in the risk management area of a company, you would kind of imagine, particularly there's a lot of transactions which today are automatically credit approved. We know that. I think there will always be some kind of human interface there. But ultimately, as consumers, we have a kind of instantaneous appetite for immediate response. And I think leading companies, leading captives in this space will definitely focus in on that kind of making great business decisions, was it in terms of asset risk, credit risk, pricing, and also from a personal point of view, I was always kind of focused on that kind of opportunity of making contextual credit decisions in the credit cycle, which, is incredibly difficult. It's easy to do it in a given landscape, but to have a system that also forward looks at the credit cycle in terms of contextual credit decisions, I think are things we've dreamt of. So definitely, as you already indicated, the credit part of the organization is where AI will have a massive impact for sure. Definitely human oversight, particularly in kind of corporate lending, B2B. Done a lot of work in the B2B lending space and fleet management. But I think what's ripe is that as costs are reduced, maybe the frontier then of competitiveness moves much more to value add on the client side in terms of CX. In this world, as entrants or existing players continue to improve effectiveness, the question is, where do we compete? And I think that answer lies driving massive value for our dealers, massive value for OEM partners, but ultimately the biggest value has to be created for our customers. And there, as mentioned, maybe on the previous answer, the Carvana example today is a wonderful example of how they've done that by using kind of AI to monitor all customer interactions and then drive massive continuous improvement in their client and CX approach to business.
Thank you. And Ian, you want to come weigh in?
Sure. I'm going to take a slightly different view than Richard. I'm going to look at it more from an operational perspective. I think when we're talking about 20 times efficiency, we have to ask how effective is that efficiency? And as a consequence, we all understand the issues where you get hallucinations and so on in data from AI. That's not necessarily going to go away. It'll certainly diminish, but it will still be a prevalent topic. And this 20% or 20 times efficiency doesn't necessarily mean that those individuals doing those roles today will be released to do other more productive roles in the future. The reality is a lot of those roles will go away because the stakeholders will demand more efficiency and more effectiveness coming out of the organization from a cost steering perspective or from an investment perspective. So I think organizations become much leaner, and those resources that are retained will be used for more critical roles where dealing much more in the grey. I think Richard mentioned, for example, the credit area and so on, the customer service area. But it's really looking at how do you take the information that's coming through any agentic system and making sure that it is indeed producing the right kind of information. So having much more analytical capability, even on the AI itself, to make sure it's actually doing the job that's being looked for. I think as the technology improves our capability, that it's going to be a core enabler. And if you're not competing in this mindset as a core enabler, I think you open up yourself to a competitive threat from new entrants. Because if organizations are becoming smaller and technology is taking a bigger role, there's much more dependency on the technology structures to be able to deliver their services. Technology knows no bounds in terms of who's buying it or using it. So that really enables then new entrants to come in, take on those technologies with maybe a lower cost structure, maybe leaner, and create some competitive threats. So I think new entrants is also an area that we need to be mindful of in this new emerging age. It's exciting, but also gives us pause for thought.
Maybe just
Thank you
chiming
both.
back in there, Fizan, before we close
Sure.
out. Yeah, I think there's a recent article in the FT just recently, kind of talking the broad kind of perspective on implementations and similar numbers being put out there as effectively the savings. But in that article too, they mentioned some of the challenges in terms of being able to realize them. And of course, starting with a redesign or at least a reassessment of your business system is essential. Because putting AI-enabled agentic processes into a broken process is not going to really deliver the massive upside. The massive upside comes from a really, I would say, a white canvas approach to this question and redesigning the business system with those kind of opportunities in mind. And we know our partners there at Genpact are pretty good at that. And certainly, you have seen a lot of the back office of Walmart, for example, and how they run their financial back office for Walmart in total. Quite enlightening. And the big takeaway, I think, from that approach was just the speed of learning within those organizations when you have such a system with agentic or AI-enabled processes in place. The ability to continually improve the business system, learn, is pretty fundamental. Yeah, so something to kind of noodle on. Yeah.
Richard, I'm sorry to jump in again, but I think it's such an engaging topic that I can imagine that many of those who are supported by large international OEMs or large banking structures, any investments in AI are going to have to come with some efficiency gains. Otherwise, the investment won't be justifiable from an investment standpoint. So
right.
there will have to be a reduction either in force, in expense, a shift to more efficiency, to more productivity. That is a byproduct of what we're talking about here.
Absolutely. Yeah, absolutely. Fully agree. Yeah.
Maybe if I could just chime in on particularly what Richard said. I think everybody registered the 95% of AI implementations fail that the MIT report recently brought out. And I think that's where, the more, let's say, intelligent approaches can differentiate themselves from the ones that are just trying to spray AI all over the place and try to implement it, is by really fundamentally understanding the business processes and where that AI makes a fundamental difference. And I think that's where you then see success in the end. That's where you see, for instance, that you become more flexible when you just don't necessarily monitor credit just or check credit at the very beginning of a contract. But when you also start monitoring it throughout, I mean, that can be done as well, providing much more contextual insights about the credit history of the person, and then maybe become more flexible in terms of suggesting, the next vehicle much earlier, and then maybe not necessarily wait till the whole leasing contract is up after 3 years or 36 months. I think you gain just so much more flexibility in managing not only your assets, but also how you effectively manage your customers and improve the potential loyalty churn that usually happens at the end of the contract.
Great. Thank you, Eva. And thank you.
Yeah, great point.
It's a big question and there's profound implications. So thank you all for taking it head on. So let's move on. Let's talk a little bit more about affordability. So Affordability is becoming a major issue for consumers. Captives must become active participants in the new mobility ecosystem. This shift is driven by a desire for affordability and flexibility, especially among younger and urban demographics who may not want the long-term commitment and financial burden of traditional ownership. The consumer base is not interested in a 72-month loan for a car that sits in a garage. They demand on-demand access, and captives must evolve their products to meet this need or risk losing a massive market segment. Captives are uniquely positioned to lead this transformation. This means developing platforms that can handle a variety of access models, whether it's subscriptions or short-term rentals or fractional ownership, and not just long-term loans. This is the new frontier for profitability and relevance. So Eva, I'd love to start with you. If private ownership keeps sliding, what capabilities must a captive build to adjust to these trends?
Well, the answer is subscriptions, right? Yeah, just making a joke here. I think we tried it all a couple years back, but that doesn't mean, and the fact that it hasn't really competed with leasing in such an effective way as many of the industry leaders were hoping is not necessarily a sign that we can now close the book and go back to our old ways. It's quite the opposite. I think the customer quite frankly, expects more flexibility. We see subscription services thrive among those that are usually 10 years older than your usual suspect that signs up for a lease or a finance. So naturally, all the OEMs will be very interested in learning more about the habitat of that new customer. So they will support these systems and these concepts. Secondly, when we talk about affordability, we know that the introduction of electric vehicles hasn't necessarily brought affordability into the play, right? But at the same time, as these vehicles are almost becoming software-defined vehicles, we have a lot of data to absorb and to consume and to process, and that might ultimately make flexible ownership a more comprehensible and a more digestible concept, because ultimately we can control what comes out of these out of a contract when it's a bundled product for the customer, when they have insurance in as part of it, when they have maintenance as part of it, etc., and they become freed from the usual worries about that vehicle. But it comes at a price, and many customers just don't know where that price of mobility is for them. But we can make it easier with smaller pieces of products that we evolve into something that starts from a lease and then ultimately is on the wider far range of products, ultimately a subscription or a rental. So innovation, I think, is key for all of the captives who want to stay in this business and also want to cater products to the emerging generations.
Thank you, Eva. So Ian, love to get your perspective.
Yeah, I think this is, as we see the cost of vehicles getting more and more and more expensive. We're seeing life cycle times being expanded now. 84-month financing transactions are highly common, but that pushes up the buying cycle. It means reduced vehicle sales. It puts more pressure on OEMs to bring in more incentives, and the cycle deepens. And I think we end up getting in that situation where we get a race to the bottom game. I think where the other threat comes into play is where we've got companies like Sixt in Europe, where they've moved from traditional commercial leasing and rentals and kind of bridged the space in between, and now starting to introduce subscription services, even to retail customers. So there are companies out there that may be not seen as competitive threats today, but they could certainly be competitive threats tomorrow because they've got a lot of the infrastructure in play to be able to do that and deliver these services that customers want. As we think about the average utilization of vehicles, this has always been the statistic: roughly 4 to 5% of vehicles being utilized at any point in time during its life. It's a really inefficient way to use an asset. So those that can bring that utilization up, create the recurring income from an investment standpoint, will introduce new business models that could fundamentally change the face of how vehicles are financed in the future. It's not tomorrow, but it's certainly not the next decade either. This is on our doorstep, and I think that's something that we need to be mindful of and be preparing for as businesses and players in the marketplace.
Great, thank you. And Eva, you mentioned EV, and that's our next topic. So let's talk a little bit about EV. So we need to challenge the assumption that current risk models can really handle the EV life cycle. The core of a captive's business is based on predictable risks. And we must ask, how are captives today proactively building new risk models that account for these variables? While most captives are still thinking about traditional loans, OEMs like Volkswagen Financial are offering comprehensive mobility bundles. They're combining the vehicle, insurance, maintenance, and even charging subscriptions into one single monthly payment. So, Eva, starting with you, and then Richard, I'd love for you to chime in. But what risks or opportunities does the transition to EVs and managing the EV life cycle really create for the captives? Eva, I think you're on mute.
Oopsie, thank you.
There
I
you
think
go.
before the introduction of EVs, all captives were mainly a source of a lot of profitability for any OEM. After EVs has been introduced and their evolving battery technology has been introduced, we've seen quite a shattering of residual values, particularly for those cars. And now I think it's a new era in which captives have to find a new model in which they need to figure out how to treat these new assets on their balance sheet. How can they potentially look at battery models separate from the vehicle itself? How can they track the units? How can they make better use of the data, all the telematics that come out of these vehicles? I think there is a lot to learn and a lot to gain. And obviously, we have to stop treating the asset as a dynamic number in an Excel sheet, but it's rather something where we have to look after an asset in a very careful and dynamic way, constantly ingesting real-time data to use that to manage our portfolio. And I think that's definitely a challenge to today's systems.
Great. Richard, your perspective?
Yeah, so fascinating space, isn't it, Fazan? And fully agree there with Eva. I think what goes through my own mind is the thought that three things transforming our industry: connectivity, zero emission vehicles, and autonomous. And those technologies are all coming together at the same time. So massive change in the platform itself. Many OEMs facing, I don't know, polycrisis kind of challenges adapting to that world. We know from our own experience in China, Fazan, 126 brands there today, maybe 20 in the future, a huge amount of innovation, competition driven in that market. So I really like what VW have done there with the packaging of all of the services for the customer. I think ultimately, business is one on ease of doing business and driving value for our customers. That was the same 20 years ago. It'll be the same 20 years from now. That's where businesses of tomorrow will live and play. And some of the businesses that we've already kind of commented on in the conversation today. I think what's really important for captives, for ourselves, OEMs, is really what I call leading with the long view. So from that point of view, the key question is, how do you drive competitive advantage for the customer in a world we know is changing? Even that human machine interface is changing dramatically. Eva touched on kind of real-time risk management effectively. I think that is, if it's not here now, it's going to be here soon. And the leading organizations in our space will know their costs, will better understand their risks, and will have the most competitive and compelling offers for our customers. So those are the kind of big picture thoughts. What does it mean for Captive 2.0? I think it's related to what you said in terms of working with a partner that builds really leading ecosystems for OEMs, captives, from the broader industry. But ultimately, I think here it comes down to CX and driving world-class customer experience, whether you want a car for an hour, whether you like to own it for 5 years and everything in between, that innovation on the product side and flexibility, that's what we have to address. Because if we don't address it, I think Ian mentioned it, somebody else will. And that's the risk we all lead if we do not address those opportunities and chances of today.
Thank you, Richard. So switching topics now, let's talk a little bit about cybersecurity and the regulatory landscape. And of course, captive finance companies, they sit squarely at the intersection of dealers and OEM, making them doubly vulnerable for cyber attacks. And of course, there have been some notable examples in our industry just in the last year or two. This isn't a theoretical risk, it's a statistical reality. The captive business model, by its very nature, is a high priority target for cyber threats. The captive that can innovate with a robust, proactive cybersecurity strategy will be the one that wins in the long run. And then moving forward, let's talk a little bit about process and technology debt, and really this concept that's central at NetSol, which is platformization and API first. So JD Power's 2024 US Automotive Financial Digital Experience Study showed that 60% of captive finance digital platforms meet base expectations, while only 2% deliver full-fledged modern UX. Customers today expect the same digital simplicity from their car buying and financing experience as they do from Amazon or Netflix. The current platforms are just simply failing to meet these expectations. The most successful captive of the future will be a technology company first and a financial company second. By embracing an API-first platform, they can deliver seamless, superior digital experiences, streamline operations, and be the leader in the new era of connected finance. So Eva, I'm going to ask you specifically, on a scale of 1 to 10, how important is it to create a unified digital hub for captives?
I think it's probably 11.
All right.
So let me dissect that a bit. I think when it comes down to API driven orchestration, API built ecosystems, why is that so important? Because it's essentially the foundation for any customer experience that goes beyond just average. Because why? Because every OEM is then all of a sudden enabled to allow no compromise on the desired user experience. But that's just the OEM view, right? It's seamless journeys, omnichannel integration, and such things. Then secondly, the second player in this ecosystem, the dealer, wants, of course, first and foremost, fast close deals, wants empowerment, wants a high level of efficiency at his store, wants to reduce the number of screens they're looking at constantly. So you need to create, dealer portals that really are a one-stop shop for desking, financing, funding, and also curated F&I integration. And that is something that is first and foremost his priority. And then third, you want a captive that is allowed to innovate and is ready for mobility orchestration and more streamlined services. And all of these goals can be achieved at the same time by an API-first ecosystem. But let me just be very clear. Just by putting the technology there, that's not just enough. You also have to use a vendor that really knows all of these three combined perspectives very well. And I can tell from my experience at NetSol, where we have been at the core of any back office system for captives and have been providing these contract management systems, servicing systems for close to 40 years. And at the same time have really set ourselves apart in the OEM and dealer space over the last couple of years with offering digital retailing system, omni-channel retailing systems. We are able to understand these different perspectives and bring them together in one platform.
Thank you, Eva. So we want to wrap up and get to Q&A. So we'll wrap up on the topic that was, again, number one on everyone's mind, which is AI. So think of this as a 3-horizon arc. In the next 12 months, AI is an efficiency engine, shrinking decisioning cycles from days to minutes, automating documents, and improving residual forecasting, and also tailoring offers at the point of sale. Over the midterm, over the next 1 to 3 years, it moves into the customer journey itself, embedded finance inside OEM and dealer flows, stitched together by an orchestration layer that unifies data and APIs. And as buyers use AI assistants, this term is getting quite popular. We're moving to GEO, generative engine optimization. This shifts us from being found to being chosen in those conversational journeys. And then if you look in the long term, which we'll call the next 3 to 5 years, the business models evolve, monetizing across the asset lifecycle, financing autonomous and shared fleets, and optimizing fleet utilization as private ownership declines. So we're going from operational excellence to connected experiences to new ownership models, and it's all going to be underpinned by secure, governed AI. So just to wrap up before we move to questions, I want to get a 1 sentence, your biggest takeaway from each of the panelists. What is the one thing captives should be preparing for, let's say, in the short term? And Eva, we'll start with you.
Okay. I think what captives need to strive for is really doing a better job in the customer loyalty space, trying to connect with the customer better through a much improved customer experience. But at the same time, also control the asset optimization challenge. And what do I mean by that? It's really about becoming a better manager of our assets and not, considering them as static numbers on a spreadsheet. It's really about those two aspects: lifecycle engagement of the customer and a more directed portfolio of assets.
Great. Richard?
Susanna, I think it's, in a sentence, leading with the long view. This is a time where, yes, there's short-term opportunities, but we should not get confused about the long-term strategic objectives. I think that's essential today for all captives. If you want to stay relevant, stay in business for the future, lead with the long view, joint strategy with the OEM, joint strategy with your dealers, and delivering kind of world-class end-to-end digital processes. Yeah, it's not easy. It can be done, but it needs to be a long-term view strategy.
Thank you. Ian?
Very briefly, I would say don't make sure you understand the difference moving from SEO to GEO. Generated content online will fundamentally change the way the customers shop. And if you're not producing content which is component-based, where your offering is also enables flexibility, you might miss tremendous opportunities. So really think about the whole generated engine optimization space, because that will change the way that we think about the business when it comes to how people search for their vehicles and their financing in the future.
Great. Hire your GEO specialists as soon as you can. So we've got about a little over 10 minutes. So want to get to your questions and hear from you. And so I will start moderating that. Of course, you can put questions into the chat there. But we've got one that's come in, and this one it looks like for Richard and Ian. So we're getting a question. So why did you decide to work with Netzel?
Maybe Ian, I jump in. So, I mean, first it was three things I would say, Fazan. Firstly, I've worked with the Netzel team for many years. It's absolute leader in this business. And from a personal point of view, when we were in Asia, 2010 to 2015, fully transformational impact in our business, implementing the NetSol systems across 12 different markets, including China, the first leasing company in China to be awarded a license in those days. So firstly, I knew it was a team with great ability to execute on the leading edge of technology. I can learn a lot from being in this team, and it's a fun team to work with. Yeah, those would be the key reasons I would say. Definitely leaders in the AI space, but ultimately business is all about people. We got a great team at NetSol and a transformational team. Yeah, really blessed to be here. Thank you.
Thank you, Richard.
I had the privilege, or when I had the privilege of running the BMW financial services business, I had the opportunity to engage NetSol for what was at the time called Mini Anywhere. And this was essentially a lot of what we're talking about today was being envisioned then. And NetSol at the time was one of the very few partners that understood what we were trying to do. And as a consequence, we trialed, we errored, we fixed, but ultimately we deployed a solution which was market leading. And even today, it's still highly present, highly valuable. And I understand that even BMW is looking at that kind of a platform for their future. So working with great people, working with people with the same kind of vision for the future, but also willing to challenge the status quo is very exciting. That's certainly why when I was invited to join the board, I jumped at the opportunity.
I may say I really enjoyed the collaboration with you too, Ian.
Yes, Eva, I remember it very well.
Okay, so the next question is, will you share a copy of the deck and the recording? Of course we will. And we will be also at a lot of the events and conferences that I'm sure a lot of the folks on here will be. We've got AFS coming up, Digital Dealer, NADA, and of course AFSA. So, please feel free to engage us there. I'm sure we've got some contact information where you can also get in touch. Maybe it'd be good, Eva, if you can drop your email into the chat if anyone wants to engage.
Yeah, I'll be at those conferences and I look forward to seeing you there.
Great.
There you go.
So we still have about 8 minutes. So are there other questions?
There's been a number of discussions actually in the chat.
Yeah, it was super interesting.
Yeah.
About
anything you want to reflect on, Ian?
And the importance of multi-cycle asset management has been a big topic. There's been a number of people asking for copies of the deck and the recording, which I believe will be made available. Yeah, some really interesting discussions going on there. So thank you for the participation.
Great. Any further reflections on because I don't see any questions coming in as of yet, but any further reflections on the chat or on the discussion today that any of the panelists want to share?
I think there was a question, Fizan, in the chat.
Sure.
Which said from Mikhail, other than AI, what other emerging technology do you believe will have the greatest impact on captives in the next 5 years? So, Fizan.
Yeah. So I mean,
as a technologist.
Well, I mean, it's hard not for everything when we talk about technology to be underpinned by AI, but there are other sort of downstream impacts. So, of course, as we talked about energy before, we talked about EV as well. Does the U.S. put itself on a trajectory to create more energy, which is going to downstream lead to more battery production? It's going to it's again really connected to AI because these data centers are energy thirsty right now. Autonomous vehicles, again, another sort of like AI topic here. I mean, we're already seeing it. Waymo is taken over Lyft in market share when it comes to San Francisco. NetSol in the US, we're mostly based out of Austin. I'm an Austin resident, and the city is littered with Waymos all over. And I find that if I take a Waymo, it costs me a third of the price to actually take an Uber X. So autonomous is going to continue being a big topic for us as we move forward. We could talk about quantum computing, but I think that's a little further out than the next 5 years. But certainly that's something on our minds and another paradigm shift, but that might be for another webinar.
Fazan, there was another question from Antonio Balaguer, but I don't see whether it's fully represented. I think it starts with, is the focus of this discussion just on the front end of the borrower journey, or are you going to discuss the back end of the journey? I think it should be an all-encompassing one, right? We're really thinking end to end from the beginning of the journey, whether it's shopping, whether it's originations, or whether it's the entire life cycle, including what happens at the end of the life cycle, because then it starts all over again. So this whole idea about multi-life cycle and about having the flexibility in terms of platforms to really engage also in a meaningful way without creating process and tech debt. Meaning you have to have the right architecture also in your back office to respond to any needs for innovation also on the back office side, whether it's as Richard was mentioning, the whole servicing idea about whether it's collections, whether it's customer requests, whether that's being solved through AI in a self-servicing manner, or whether it's resolved in a much leaner structure of a customer support desk. I think those are all the topics that will ultimately also return to the architecture question and the system support question once you determine the process.
Yeah, Eva, you mentioned something a few months about multi contracts, and I think if you're only thinking about the current contract or current engagement and how you manage that process, you're already maybe not thinking broad enough. You've got to think in multiple cycles. How does this asset go from new, almost from the point of creation and launch into the marketplace, to its final use and destruction at the end of its life cycle? And how far do you want to play in that cycle is a critical and important factor, especially if you're going to get into the leasing side of the business, where this is certainly kind of leading when it looks towards subscription type services. Understanding asset lifecycle management is such a critical component. If you lose sight of that, I think you're at risk.
Mm-hmm. Yeah,
I agree.
Yeah, both great points. I mean, just to chime in on the last one, it's interesting. You can't be number one in new cars or new trucks unless you're number one in used cars or used trucks. And greatest value for the enterprise is when the brand is number one in the new product and number one in the used product. Yeah, this is something to be considered. Yeah.
Yeah.
Great. Any other questions coming in, Eva?
That's what I just saw on the chat, but I think we're good.
All right. Well, unless there's any final, we have 2 minutes left, but are there any final statements you want to make before we wrap up here from the panelists?
Just a big thank you to everybody online and to you, Fazan. Thanks for doing a great job. And
Yeah.
we're privileged to be part of the team here today. Thank you.
Yes, we recognize that people are taking the time out, and time is valuable. So thank you for participating with us.
Likewise, and also for making it a very interesting chat this time. So people should be not only listening, but also looking at what's being spoken. So thank you so much for the support, AFSA.
A special call out to Eric for organizing. Eric is our head of marketing and has done a great job in providing the platform for today and the discussion for today. So thanks to Eric for setting this up.
Hats off to Eric. Thank you. Thank you, everybody. Thank you for joining us. And we look forward to engaging with you. You can, of course, learn more about NetSol if you don't know at netsoltech.com. Feel free to email any of us. I think our contact information, the webinar and the recording will be posted to the audience. Thank you.
Thank you, Fazan.
Thanks, everybody. Thank you.
Thank you all for attending our webinar. Just a reminder that the recording will be available on our webinar page next week, and we hope everyone has a great rest of your day.
Thank you, Grace.
Thank you, Grace.